It's a self-learning, adaptable, and scalable. With each new data coming in, the algorithm is learning from this new market condition, the new events. It's adapting to the new market environment. The system is available, meaning we can integrate additional markets and securities, whole exchanges to the system. For example, Johannesburg Stock Exchange, etc., to allow you to discover best investment opportunities in your local markets, or use the system as a decision support tool of your existing investment process. So currently we're tracking 3,000 assets, stocks, voting indices, ETFs, etc., and the universe is growing every day. So this customized algorithmic solution we offer to our clients, ranging from family offices, wealth management firms, advisors, and retail clients, and the whole client base has grown by 400% in the last 2 years. So just to give you just a little bit of information about the brain behind the algorithm, this is our CTO Lipa Roitman, a PhD from the Weizmann Institute of Science, who has more than 20 years of experience in artificial intelligence and machine learning techniques, and he's leading our R&D team and developed this whole algorithm. So short overview of the daily process. We use up to 15 years of historical data, and every day this data is updated. So it's interest rates, currencies, all the closing prices, volumes, etc., whatever we can find, which is daily updated. So this data is fed to the system, which runs then pretty the whole night for 5-6 hours to learn the new conditions of the market, to train the system, the whole optimization routine. And after this, we are able to generate predictions and deliver them to our clients before the market opens. So the predictions are generated for different time frames, starting from 3 days, 7 days, up to 1 year. And this is basically how it looks like. So the main research product we offer to our clients looks like this heat map on the right side. You see at the top, you see the best long opportunities as discovered by the algorithm, and at the bottom in red, you see the best sell opportunities, so short stocks. So in each cell of this heat map, it basically represents an asset. So you see the symbol, the ticker of the asset, and two indicators, kind of first variety. So the first indicator is the signal. Basically, the sign of the signal shows if it's a buy or a sell recommendation, and the signal strength is related to the expected return, basically to the magnitude of expected return. The second is the most interesting indicator and quite unique to first. So this is the predictability indicator that you see here, for example, in case of Sandton 0.3. So this is basically fitness function that is being optimized during these nightly optimization routines. And simplified, it can be viewed as a correlation-based quality measure of the signal. So with this help, we can separate and focus on the most predictable markets and securities to improve the performance. So if the predictability is high, we can trust the signal, and then we execute the corresponding trades. Now this is here in this slide, you can see an example of some strategies using up 1 day predictions. This is the short-term model. So you can see that by focusing on strong predictabilities and strong signals every day, rebalancing, one could achieve returns between 50 and 20%. This is for the period until since the beginning of the year until end of August 2016. As you can see, also the Sharpe ratios are quite high, so we adjust for compensated for the risk. Okay, so basically this is another slide just to show you the importance of the predictability. If you focus on the chart on the left side, you can see that both signals and predictability played a huge role to improve the returns. If you go in each of those up, you see an upward slope, and the main idea is to filter for high predictability levels and then to focus on the strongest signals to rank the stocks and select the best opportunities. Let's go to the next slide. This is how our research product is used by many of our clients. So, for example, you are following a bottom-up approach and you're doing some fundamental analysis, and you would like to have some additional tool which helps you to detect additional opportunities that you might have missed by doing your own analysis. You add it to your own analysis then, and additionally you can use the system as an additional algorithmic screens. If those two opinions basically are aligned, then this is a good decision. So you feel more confident in constructing your final portfolio. Yeah, and the customization we offer, first of all, it is possible to integrate, as already mentioned, additional markets and exchanges. So, for example, specifically in Africa, it could be the Johannesburg Stock Exchange or the Nigerian Stock Exchange, Nairobi Stock Exchange, etc. We can add additional securities for our clients. We can define criteria how, like, on what specifically they focus. If they filter somehow their companies by some fundamental key ratios and only want to consider them for investment. So we create this filtering and deliver the corresponding focus to our clients. Okay, so last two slides, this is basically our business model and the solutions we offer. So on the left side, you see the prediction services. This is this research product that we offer, and on the right side, the mining and fund management service. So from the predictions we give to our institutional clients and retail clients. In the retail case, more standardized packages showing the best opportunities currently in the market as discovered by our algorithm, and we also think to develop a robo-advisory platform on top of it, utilizing the signals that we provide. For the institutional clients, they receive cost and extended access to the algorithmic predictions and customized specifically to their needs. On the side of the fund management, we can partner with the institutional clients to launch a fund, and we will provide the final, basically the final trades to execute and manage the fund. So if you find yourself, you're interested in one of those areas, you can contact us. This is basically how some corporations could look like. Also, if interested in this, let's talk. Yeah, that's it. Thanks a lot. Unfortunately, we will not be able to be on stage live, but thanks for this opportunity for the call. Thank you very much, and I'm open to answer all your questions in the remaining minutes.
Thank you, Dmitry. Thank you.
Thanks a lot.
I'm going to turn to my judges now, who've been taking furious notes. First question, any volunteers for Dmitry?
Yeah, I can hear. In case I didn't understand properly, we can also chat a little bit. So.
Great. Okay, I'm going to hand you over to Mark.
Thanks.
Well, one more time?
Hi, Dmitry. Mark Belkin here. Dmitry, it looks like you've got a black box, an investment black box. You've got to run an algorithm. How do you explain this to customers? How do you win customers? How do you find your customers? Who are your customers?
The question is about customers, but what exactly I couldn't hear properly. Excuse me. Can you maybe repeat it or possibly type in the question here?
Can I ask? Who are your customers? Who are you selling to? What does your typical customer look like? And how do you reach that customer?
What the customers look like? Okay, so as already mentioned, this ranges. So we have retail clients, but we have also family offices, wealth management firms, and hedge funds using the algorithm, to integrate into their investment decision-making process on a daily basis. So it's different, and the difference is basically to what they subscribe. If it's just like some more like a standard package where they know, okay, these are the best opportunities from specific sectors or from specific exchanges, markets, or it's more customized, specifically focusing on the universe that the company is interested in. For example, the client, like family office from the States, interested specifically in investing, constructing income portfolios, or investing in MLPs. So we added for them a lot of MLPs to our system, and they got the focus specifically for this. Of course, it's more work to integrate this, and it's also more work to deliver this forecast. So for the South Africa, if somebody is interested to have this product for the Johannesburg Stock Exchange, this is what we would do.
Dmitry, there's dozens, if not hundreds, of different trading software. How is yours different, and how do I know it's different, and why would I use it instead?
Okay, I understand. How it's different? So. First of all, it's not we give you trading software itself. It's more like a research product and advice that we give you based on our advanced self-learning algorithm. So the main difference is if you, for example, compare it to some statistical models or to technical models. It's derived from some human assumptions on the capital markets. In the capital markets, they are changing basically on a maybe not on a daily basis, but on a yearly basis. They're changing the assumptions and theories. They're not held anymore, and statistical models that they try to calibrate, they are just not holding anymore. So we have a much more complex and flexible system in the form of these neural networks, and they can change and adapt. They build their own features and parameters every day with the new data coming in. So when the market is changing, the whole system is changing. And so the algorithm is able to adapt to those changes in the markets and to discover better opportunities, even if the market evolved comparing to what it was 5 years ago, let's say. So this is basically the main difference. And this is not the case if you use some non-statistical model. It might not work in 2 years. And technical analysis is the same.